Huh. Okay. Well, I thought I did.
Gremlins.
All right. There we go. How about now?
There you go.
Okay. Perfecto. Hey, everybody. Welcome. Look, it's April 1st. I tried to think up some crafty April Fool's jokes, but finally just gave up in the end in the market, in the trading world, and kind of dancing on thin ice when you do stuff like that. Anyway, what's going on over there, Steve?
Just Monday and a nice spring day in San Diego. Not much.
Yeah, it's a nice spring day here in Texas too. Getting a little sunshine, not so cold, so we'll take
Allergies.
it when we can get it. But yeah, I got cold on us, and yeah, my allergies are trying to do me in, but I will persevere. All right, everybody, thanks for attending. We appreciate you guys taking the time out of your busy days to come hear what we have to say on these 5 o'clock Eastern webinars. So without further ado, let's just get into the legalese, get that out of the way here real quick so the attorneys can sleep well. Just want to make sure that everyone in attendance is aware of the fact that all of the information that we share with you in these webinars, or whether it's the TI universities or anything else, they're strictly for educational purposes only. If you do need investment advice, what to buy, when to sell it, all that good stuff, please seek out a registered investment advisor or some other licensed person like a Series 7 stockbroker that can legally give you buy, sell advice and things of that nature. And all of you regular attendees, you know the drill here. Bear with us a little bit while we tell the new people about the community that we've created around the award-winning technology known as TI Pro. And what you see right here is where it kind of all starts. Up here at the upper left, we've got the trading room, which is our trading room. It's hosted by Barry Anderson. He's the moderator in there. Opens the room up 30 minutes before the open. And, recently, we've revamped the trading room. Barry's got a new software in there, getting all kinks ironed out. From what I hear, it's functioning well, and everybody's loving it. So a little transition, but business as usual and a better interface. If you've shopped around trading rooms on the web, you've probably realized that there's a lot of them out there, and most of them are charging some type of fee, but not here. You don't necessarily even have to be a TI subscriber to get in there and see what the trading room is all about. So if you haven't been taking advantage of that trading room, get in there and do so. Great place to learn about the software and get a feel for what some of the other traders are doing as well. Of course, today's Monday. You get myself and Steve for the 5 p.m. slot. Steve's going to take the helm tomorrow on Tuesday for the trade of the week. Andy Linloff is going to ride shotgun with him. Wednesday comes along and we've got the Q&A demo, typically with Dan Merkin, our CEO and founder of Trade Ideas, along with our CTO, Chief Technical Officer, Mr. Brad Williams. I don't know. I think Dan might be on vacay this week, so I'm not sure if that's going to be business as usual on that one or not, Scott. But I guess we'll let you know before that day shows up. Thursday, the last 5 p.m. Eastern webinar of the week, Andy's Trading Studio with Andy Linloff, and I ride shotgun with him. And then, of course, change it up just a little bit on Fridays. We've got the Friday support session starting at 11 a.m. Eastern time and going until 2 p.m. Eastern time typically. Been getting record crowds in there. The cool thing about the Friday support session is it's anything TI related, and especially since we've launched Holly Automation, B Plus is in full swing, starting to get a lot of questions for Brokerage Plus support. So if you have B Plus questions or Holly Automation questions or anything TI related, Friday support session is the best place to get hands-on, real-time answers to your questions, because not only do you have myself and Steve in there, but typically you got Andy and Sean as well. So you got 4 brains in there, all attacking your question at the same time. Now, TI universities. These all begin Monday through Thursday, and they start at 12 p.m. Eastern. Monday we have Beginners 101, Tuesday 201s, Intermediate Wednesday, and then Advanced 401s, which I teach on Thursdays, starting once again at 12 p.m. Eastern. Usually those go about an hour and a half, pre-planned content. Everything you need to know to get proficient with TI Pro. Of course, we do recommend that you take these in order, because what you learn in 101, you'll need to build on 201, so forth and so on. So all in all, 9 webinars a week for your educational pleasures. So if you haven't been taking advantage, sign up for all of them. Next slide here, just a little peek we like to give everybody as to how everybody's receiving the AI, which, if our client base is going up since we released the AI, well, people must be responding well to it. So here we have 2017, 2018. What's the 2019 bar going to look like? Probably following the pattern here, a little bit higher than 2018. So people are receiving the AI well, and of course we have unleashed it for auto execution. So if you haven't been taking advantage of the AI, you might want to do that. Now, getting on into the content for the day, as always, we're going to let Steve talk a little bit about the overall markets, where we've gone, where we might be going, all that good stuff. So, Steve, if you're ready to take it, I will kick it over to you.
Oh, sure, kick it.
And we can do that.
All right, let me know if you see my screen, Jamie.
I do see it. What a chart you have up there.
Guess what I'm doing over here, Jamie? Guess what I'm doing? I'm doing some technical analysis on Lyft.
I love it.
The channel is not looking that good in this IPO, Lyft. So, let's just have a little fun here for a second. I mean, are people learning their lessons yet, especially the millennials who might be a new generation? Snap's trying to recover, but, back here, buying it at 27, 28 on the first day, watching it go down to 5, that's no fun. What about Blue Apron? That's another fun one. Picking it up, not too great, 5, but now it's under $1. That's, of course, not that great. Fitbit, never really got its traction going over there either. So, then we come forward to Lyft. It's just kind of doing the same thing. These IPOs, guys, they have nothing to do with the market. We are the secondary market. We are the exit. Well, I shouldn't say we. The buyers are the exit strategy. That's right. These people right here that came in and bought and lifted the stock on the open. These are the people that facilitate the exit strategy of all the venture capitalists and all the inside traders. And it takes a while before you can figure that out. Now, in all fairness, Facebook did the same thing. We'd have to go back really to a weekly chart to see that, but why not? Let's do it. Actually, a monthly chart, but let's see if we can get away with it with a weekly. Facebook started down here in the 30s and then dipped into the teens, lost almost half its value. But of course, Facebook did recover. So the point is, you can make money in IPOs. You just can't make money in IPOs on the first day, especially of stocks that are super well known, super anticipated, and super hyped. All right, I saw a couple of.
And it's not like you can short them because they're not available for shorting.
Christopher says Kramer loved it. See, I wouldn't know because I haven't flipped on that station in about 7 or 8 years. So I sure hope Kramer didn't love it. That's not fair if he's telling people to come in and buy that garbage. Not loves garbage, it just needs to sort itself out a little bit. So let's bring it back to the real time. What did he say? Oh, he trolled me. The time frame, and we can get back to basics here. Daily. Although that is an interesting look there at the spiders, isn't it? A nice big bounce off of the 200 week. We haven't looked at that yet. We've looked a lot at the 200 day, which is going to pop in right there. There's the 200 day, which was a big issue, really, for the most part over the last 6 months. So what's the story of the current market? Well, we've got to give it certainly applause for basically ticking off all the major moments of resistance that it had to plow through to get to where we are today. I mean, this pullback wasn't that deep, but it was enough to at least still kind of push us higher. But I'll tell you what, this last week and a half, 2 weeks, has been really tough. I don't care if you're a day trader or a swing trader. I mean, starting off with this brutal neck snapping gap down. I mean, one of my favorite methods when swing trading is to find these days and ride them for a day and a half. We've talked a lot about that. Well, you didn't even come close to that in that particular case, because that particular gap down day was absolutely vicious. And then not too much of a gap there, but then we had a gap up, and then not much of a gap there, a bit of a gap down here, and then a big gap up on Friday, and then another big gap up today. So really the money's been made, whether you're day trading, I think, for the most part, or swing trading, in putting risk in overnight on these charts. It's not easy. I mean, I call this dance of the sugar plum dojis. I mean, this looks like a bunch of little spinning tops here. Spinning tops are not really conducive to making money unless you're on the right side of a gap up swing trade and you're holding for stuff going in the right direction. So difficult market environment in the last few days for sure, and that will translate into Holly. I know Jamie will touch on that as well, especially the gap days. There's something about the AI that just has a difficult time getting any traction on the gap days. It's like almost all the meat's taken off the bone on the gap, and there's really not much left over intraday. I mean, you can kind of see that here when we look at the intraday chart. The gap up from here to here, and then the rest of the day from here to here. It wasn't quite even. You know, 60% of the day occurred on the gap up, and then a slow slog and a grind higher. If it didn't shake you out, it'd wear you out. But that's where we are. So bigger picture, hey, you can't complain about this. It just keeps breaking every upside resistance level that the market, the traders throw at it. And so now we've got a big gap. Is this going to become a breakaway gap, or are we just going to slowly back and fill back into it and use that as support and grind higher? But the bottom line is, guys, there's really no bear case to be made here. I thought there might have been a bear case to be made back here on this next snapping reversal that could have easily started some more downtrends, but it didn't. The buyers just keep stepping back in, buying the dips, higher lows, higher lows, higher lows. There's really nothing that you can say bad about this market when it comes to wanting it to go higher. It seems to find a way to do it. So with that being said, we've cleared a lot of this major congestion back here, which we talked a lot about, and is now seems to have resolved. So where do we go from there? Basically, we're now looking at these levels up here, the prior highs. We were getting in the neighborhood once again of the prior highs. And when price action gets in the neighborhood, it usually wants to stop by and say hello. So I don't see a reason why we can't get there, especially with some of the quick sectors here. Big bounces in the banks that were really looking horrible just 5 days ago. Big turnaround in the bank. We do have a big turnaround in oil. Not turnaround, but another move higher in oil. These have been some of the notables. There's the financials again. Steel actually won the day with a giant overnight gap. But these sectors will go for about a day and a half, 2 days before they turn and pass the baton. I mean, tomorrow we could be looking at gold miners again back up. It's just the way the market is. You can't ride something for too long. This market is 3 steps forward, 2 steps back when it does go in one direction, and I think we can kind of see that based on the last few days, a week and a half. Looking at the others to see where the leadership is. You know, it's interesting. The SPYs took out, S&P took out that respective high from a week and a half ago, where the NASDAQ didn't. That was one notable I kind of looked at today. Same thing going on over here in the NASDAQ. You know, the next level of resistance is more than likely going to be that line, but we'll see if we can get back above that recent high like we did in the spiders. Go to the Dow. The Dow is just creeping and sticking its head barely above. We'd call that probably a successful close above the range there in the Dow. Maybe a couple more days, but look, it got hung up back here in the past. So the Dow does have some issues at this area. We'll see how it resolves in the next couple of days. And then lastly, the IWM, which was the one leading us down for the most part, still has not recovered, still has not gotten above its 200-day moving average. Still got a ways to go before it gets back up here to its highs. Definitely leading the pack from behind. So if the market is going to move higher and we do pass the baton, like I mentioned earlier, and sector rotations, might be not out of the possibility to see the IWM Russell 2000 try and play some clear catch up here in the near future. We'll see. Other than that, that's kind of it for the observations. I do like to look at Apple a lot to see, you know, what it's doing. It's trying to get back above its 200-day after looking like a whale breaching last week above its 200-day, then plunging back below. So it too is just continues to find bidders and slog higher. So that's really the takeaway. The big subtitle is, of course, these dojis. You know, the last 4 out of the last 6 days, just basic spinning dojis where the market opens up either up or down, rewards those who took risk home overnight, and then just proceeds to throw elbows back and forth until some other catalyst comes along. I mean, I believe it was China's PMI or China's economic numbers that came out yesterday that helped this big gap up and follow through in today's market. And that's it until we find another catalyst. There's really no bear case to be made right now, guys. So that's what I got. Jamie?
Good stuff, Steve. And I guess it's all up to the FANG stocks, right? Based on the Qs lagging a little bit.
They're lagging a little. If they have one good day, that'll pop it right back in place.
Yep. And of course, you know, as Steve already pointed out, hopefully you can see my screen again, right?
Yes.
Okay. So, you know, the important thing is we got the close, as Steve was saying. He took out this high, and we officially have a close here. So, you know, will we ebb and flow around this area tomorrow, slowly making our way back up to all-time highs? I mean, it's possible by the end of the week we could be there. Maybe, maybe not. We'll just have to see what tomorrow brings. But getting back over here to the content, you know, the gap. We've talked about this ad nauseum. You know, when we do have significant gaps, it makes it just generally harder to find trades because, hey, if you're an intraday trader and, you know, you're looking to make 1-2% on your intraday trades on a good trade and the market gaps up almost half of that, well, then a lot of this theme is already out of the market, and, you know, we're left with what's left over, so to speak. So, you know, expectations coming into today, you know, when we saw this pre-market activity up here, and of course we got the open right in that little pre-market consolidation area that we saw there, and it was this type of activity, 15-minute candles that we're looking at here. So, you know, I'm sure those of you who saw the gap and engaged with Holly, you know, because we've said this over and over again, when the gaps come, makes the statistical model run into a little bit of resistance, so to speak, because, well, a lot of this theme's already been taken out of the move. So let's see, I was going to use, I think the 26th was a pretty good example where we did have a significant gap up. And, you know, as far as forming expectations, which those of you who attend on the regulars know I like to consult the CC window, the great oracle that it is from time to time. It's been pretty much on fire as of late in helping people, including myself, temper their expectations on what might happen. But the reason I wanted to use the 26 as an example is we had a big gap on that day. We had massive compare count readings to the upside, and we're thinking, well, you know, how much higher can we go on that big gap up? I'm seeing these big compare count readings. Guess what? On that day, it didn't happen. Today, we had pretty much the same. Of course, we were creeping up to the top of that area of resistance. Probably had something to do with it, I would think. But we had massive compare count readings in the first 15 minutes. Well, not as massive as the 26th, but about 57% to the upside. So we're thinking to myself, or I'm thinking to myself, okay, we had a pretty significant gap, and now the compare count readings are telling me more of a upside bias than downside. Okay, well, we'll see what happens. And then later on in the day, we gravitate. We put in this high pretty quickly here, 1, 2, 3, 45 minutes in, start to do this little consolidation dance here, poke above. It wasn't easy. It wasn't an easy penetration above here, because then look what happens for the next hour before we make one more push and finally break on through to the other side. Give Jim Moore some credit for that one.
Mm-hmm.
But then we just grind higher, right? Just a slow grind higher. Until the end, Steve. Indeed, indeed. So no matter how you slice it or dice it today, not an easy call, right? There were some shorts that were spit out by the AI that didn't do so well. But then again, looking at Holly being predominantly long today and the way that she finished today, we're like, yeah, you know, the statistical model having a little bit of difficulty digesting the gap. So, you know, it'd be a whole lot different if we didn't have a gap and we got to enjoy all of this, but that's not the nature of the market, even though that's the way it should be. This is the world that we live in. Now, Holly didn't just get clobbered today. It was kind of a churn fest as far as the statistical model goes. You know, we had Holly 1.0 with 6 trades finishing down $1. Holly 2.0, 9 trades finishing down 35 cents. And then Holly Neo spitting out 12 and being down 27 cents. So she didn't get clobbered, she just didn't make any money today. But now that we're through this area here, could be a completely different story tomorrow. So, you know, a lot of things flowing through my mind this morning, like, okay, sometimes inaction is the best action, but hey, we come itching to go every morning, right? We as traders, we don't like to arrive here and prepare and then go, well, I guess I'm not going to do anything today, because there's always something out there, even on a day like today. The statistical model was not the treasure trove that it sometimes is today. But there were still some good plays, and as always, still some nice examples of risk-on spreads and how we might be able to capture some of those, but only a few today. We had 4 decent examples. 2 were significant, I'd say, or, you know, a little bit more juicier than these other 2, but hey, the spread is the spread, so let's talk about that. And we'll just take a look at Holly Neo first and what was presented here. So we can see I've got my blotter over here, or all of these blotters for Holly 1.0, 2.0, and Neo sorted by risk on, taking a peek at the spread that exists between risk off and risk on. So we'll save the best for last here, and we'll take a look at this one, which is nothing to write home about, but once again, it is about capturing some of this spread here, which on this one was only about 14 cents. But hey, when Holly's getting out for 28 cents, 14 cents is a potential another, you know, 50% or so that you could have captured out of there. And, you know, depending on your trading volume, well, it makes a difference no matter if you trade light or heavy, but penny here, penny there sure does add up, especially when you're on a lower commission, or yeah, it doesn't matter if you're on a low commission or high commission, but the pennies add up over time. Preferably, you're on something similar to what IB offers, which is $1 per trade and maybe a little bit of tack on per share. If you're at one of the bigger retail outfits like HeTrade or Ameritrade, yeah, you're paying the $4 or $5 a side, but the pennies do add up. So let's take a look at FAST. FAST was on my radar from last week because of what we had forming on the daily here. Of course, I was out of the office on Friday, which is when it did close and got into the all-time high territory. Tried on Thursday, didn't quite make it, but pretty decent signal from Holly today. And that is the, you know, once I saw this one pop up, I was like, ooh, FAST must be up there at its all-time high, which can be a very positive thing because when we look to the left here, not really anything for it to bump its head into. So here we have the entry for Holly right here, 65.37, and in risk-off mode, she made it the whole timed exit. One of Steve's strategies, actually, the good old quarterback. So let's just pull Neo's segment up over here, take a gander here. So quarterback, and I'll just sort these by win percentage coming into the day. Not the best one, but coming in second on statistical probability as far as a win percentage goes today. 67.5%, anything coming out of there based on the back test and the optimization that Holly had performed as of the close or Friday night, we could say. Spitting out 5 trades and underperforming slightly today, operating at 40%, so a little underperformance today, but not a big surprise based on the gap. And our hold time, let's take a peek here, 45 minutes. She made it the duration, right? Stop out did not occur, profit target did not occur. She just simply closes the trade at the end of the time here. Now, when I'm looking at this this chart here, right here, see how we got this sideways action. Kind of surprising that she didn't pull the plug a little bit early, because a lot of the times when we get the sideways action, she'll call that audible and execute a reduced risk or a profit save. We will be looking at one that did that in the MPC when we get to that one. But this one, she decided to stick it out and got through the whole timed exit, closed it out about right here. So as the day dictates, right, a lot of the times we can look at the chart, and if we like what's going on, which I definitely liked what was going on the daily because of this one being out of its box, being into all-time high territory. So we could have made the decision with Holly right here and got out of the whole lot, took our 28 cents and said thank you very much. Or we could have said, which at the time before the rest of this chart had formed, this looked really, really good. Assuming it can toe the line here and stay above the entry line, you might have thought at the time, man, this one's looking good. I'm going to stay in for the whole lot. But it probably wouldn't have worked out so well if you stayed in for the whole lot. You would have been back down to flat before too long. This one never really tickled the stop area. So, never really like to see a profit turn into a small loss for a period of time. But in this case, you would have been rewarded in the long term if had you stuck to your hard stop. Those of you who have heard me talk about the 50-50 mode, it would have been half as good because you would have locked in half your profit right here on half the position. And if we would have used the break-even stop loss on that second lot, you would have got stopped out on this one, right? Gyrates right back down. We're thinking, hey, we're going to peel out a half with Holly. We're going to keep the other half, try to make a little bit more. We would have been denied on that one today as the stop out occurred. Now, if you would have just held it, said, I'm sticking to my hard stop, you're taking more risk, you would have gotten all of that today. But you want more, you're going to have to take more risk. And sometimes they don't act so nice. Sometimes you will get nicely in the money and eventually get stopped out. But due to the market conditions, this one getting stopped out on the rollover of the the second one, if you're holding and trying to prevent a loss and keeping the break-even stop, it's just par for the course today. What I did like about this one, up until got a little bit bleedy here on the 10-period SMA, closed a couple of bars here, but then here caught back above and finished riding that 10-period. So once again, a big whopping 14 cents of risk off, risk on spread there. This one, a little bit juicier coming from the same strategy, quarterback, 20 cents, 72. So we had 52 cents of spread in this one, and this one behaved quite nicely. We got the signal right here. I like this trade from a couple of auxiliary points here, and I'm just going to draw a line here. What do we have here? We have the quarterback because we ran up, we took a little pull back, saying, hey, statistical probability dictates this might be a good entry. But then my eyes take me to what's occurring here on this, once again, 15-minute candles that we're looking at here. As Holly calls it right here, we had just broken above a nice little tight range break, nice and cuddly right here. Holly gets the pullback right here, and I'm thinking to myself, hey, coinciding with my favorite pattern, which is a range break. So this one really did present the opportunity to leverage the position a little bit more because we've got the statistical probability being delivered via Holly, and then, hey, sometimes it's going to coincide with the pattern that you like. In this case, a nice tight range break. So we had 1, 2, 3, 4, first hour and 15 minutes in. We get the statistical probability from Holly just right after the range break, and then a march higher. So the shaded area here is also going to coincide with the timed exit, the risk off time that Holly spent in. And on this one, even though these patterns looked very similar, fast looked pretty much the same. It just didn't have the chops to stay above. But this one, a different story. Now, once again, up was down and down was up today in some regards, because at the time we're looking at fast and we're checking out relative volume, which is always a good thing to do, whether you're viewing it through a top list that you have or the good old single stock window here. Even though Peg A finished with a lower relative volume, it managed to hold up today. Why is that? Don't really know, just an observation. But had we adhered to the 50-50 rule, we would have taken the profit with Holly on the 20 cents, stayed in, set our stop loss on that second lot to break even, and would have been rewarded with a lot less risk because this one never rolled over and kept you in it for the remainder of the move. Once again, if you like taking more risk, stick to your hard stops. You would have been rewarded in this one as well, also with the less risky mode of using the break-even stop. But just to recap, on a day like today, might not be a bad idea in the future when you see a gap like this, just saying to yourself, okay, well, if I am going to engage, pretty much just going to stick with my hard stops. Might make a lot of sense. So a nice 52-cent spread there. I don't ever like to use the term easily capturable because at the moment we never know what's going to go down. It's just in retrospect, this one never really threw us any curveballs. Yeah, looks really good. Range break here. It was already pretty much past, and there's not really quite enough time in the fast trade. But yeah, this one lined up perfectly, Waleed, coinciding with the range break, which I like. Also, too, take a little look here. Peg getting out of this area here, but still has a little bit to go before it's in all-time high territory. Matter of fact, Peg is probably going to be one you want to keep an eye on moving forward, because once it gets up here, it is also going to be into all-time high territory. So Peg might be, or Peg A might be a good one to keep on your watch list moving forward. All right, now let's take a look at this little guy right here, MPC, which was from the breakout strategy from the 2.0 segment. Breakout, let's just resort by win percentage. Breakout coming in third here with 64 percentile, also underperforming a little bit, only hit 1 out of 2 today, performed at 50%, came in with 64% expectations, but once again on a gap day like today, we get a few things thrown into the machine which could clog up the gears a little bit, but nonetheless a solid entry here from MPC. This one not quite as pretty, but not too far away from a range break here. If we just look at the first hour, draw a line right across here, kind of ebb and flow underneath there. We crack it here once, ebb and flow around that line again until Holly gets the signal from breakout. Thusly stated, coinciding with a little range break here, and then just a straight march up. Hey, we all like the immediate gratification. We all like it when things just go up and don't hover around the line too long. But she captured 17 cents on this one. Hold on here, Steve. Yeah, I guess it was the end of this candle here. I'm like, well, you know, once again, timeliness here, 61.25. Yeah, so her exit on profit save, you know, here we have the sideways action, but I think she drug her feet just a little bit here, let a little bit of that slip
Holly
away.
has feet.
Yeah, they're cyber feet, but entry price of 60.63 here, topped out at 61.29. So she let a little bit of it slide away here. And then if we would have held it here, we would have gotten a little bit more back. So not exactly an easy call here. You know, if you waited until Holly closed the trade out, we're closing underneath the 10-period SMA there. That one, you know, that was not an easy call. Once again, if you're sticking to hard stops, yeah, we can say, yeah, never got close to that. But letting that much slip away, well, this one, not like the others. So even though this one did finish a lot higher, not near as, it just wasn't as easy to stay in, because, you know, who wants to, you know, really hold it once we get the close between that 10-period SMA as well. So more holding to the close, but not such an easy one to try and pick as to one to stay in. So AAC, a big nickel is what Holly takes here. And we get a little stretched out action here, not really the consolidation that we're used to seeing on an audible call here of reduced risk, but that's the call she made nonetheless. Makes the entry right here. We get a nice push in the next 15-30 minutes. And Holly, once again, doesn't top ticket, but, you know, waits for a little bit of a decline here and takes her whopping 5 cents. And we can always make the decision here. Do we want to stay in or do we want to get out? Once again, not one of the most pretty ones. Doesn't look anything like Fast or Peg A. But had we made that decision, or had we stuck to our hard stop, taking on more risk on this one, you would have been rewarded. As we can see here, the break-even stop would have also pegged us out. And on a day like today, not unusual to see a lot of the break-even holds get pegged out there. But the good news is if you're using the 50-50 methodology, it's still a winning trade. You're locking in the profit on that first half. That's the whole shtick behind it. If it doesn't continue, you try to flat or just lose a few pennies on that second lot so that you get to hold on to what you have on the first lot. It just so happens today that on the smaller spreads, those
Warning, audio lost.
were the ones that would have gotten stopped out on the break evens in the
You
bigger.
broke up there for about 20 seconds.
Hello, Steve.
It was the only time you broke up. Just about 15 seconds there. That's it.
All right. Well.
So far, so good until that moment.
Well, if you're saying I'm good, I'm good.
You're good now.
Okay.
It was just that one moment. It was just
the squirrels. They're trying to kill me over here. I had to have a whole new line ran in my house, and it's a brand new line, so I'm getting. It's been problem free all day, so I'm starting to panic now. Hopefully, it's just general neck congestion. Okay. So that's about all of the risk on opportunity that we had today when we, obviously Holly Grail. And I'm surprised that there was even a little bit in NEO today because they both finished in risk off mode. While Holly 2.0 risk on, Holly 1.0 and NEO both finishing in risk off. So the gap threw a little curveball in there today, but man, if we gap up a little bit or just open where we closed yesterday, we could be back off to the races tomorrow with the statistical model known as Holly. So the range breaks that I typically like to showcase as well, it was slim pickings with those today as well, but there are always a few to talk about. To the downside, I've got two favorite tickers here. Range breaks to the upside with no resistance, which a couple of these were exhibiting those characteristics. But that ticker was pretty lively today, it's just the timing wasn't there, and of course, timing is everything. To the downside, they were pretty much non-existent. But I had one of my favorite top lists up here, but I accidentally closed it. What I'm going to do is bring it back up just so I can give everyone a peek, because we haven't seen this in quite some time. My pack leaders top list here. It's been a very long time since we had a packed list. And I can scroll down just a little bit, and of course we're only seeing, let's see here, we're only showing about 100 on this list right here, but even so, it's been a very long time since this thing has been that packed. What's this indicative of? Well, these are all stocks that are at their all-time highs, right? Thus the name pack leaders. So a lot of the times when this thing gets real packed, it is indicative of a move higher, but of course there is no guarantee. But I just wanted to show this because typically it hasn't been near this packed. When I saw it today, I'm like, well, things are bubbling under the surface. Head of the snake is starting to move up. If the head closes above, which it did today, well then hopefully the body's going to try to catch up as well, which could propel us higher tomorrow, but we just don't know yet. But an interesting observation on the pack leaders top list there. So on the turbo brakes up no resistance, we did have a couple of nice setups. We had UBNT. Let me just pull that one up. And you really had to hunt for these today because a lot of them, the timing just wasn't there. We can look on 15s, but I think it's going to be better to click the time frame down to the good old 5s for these, just so we can see all the detail. All right, so UBNT, Ubiquity Networks, always want to call this Ubuntu, but that's not what it is. So here we have the open. We got a nice little downturn here, but eventually, slowly making it back up. And then these are going to fire when the 1 minute volume is coinciding with the new high, and then we just have to kind of size it up here. All right, if we can catch it right as this level is being broken, and we can stomach the prior 15-minute risk, which we're looking at 5-minute candles today, so we got to count back 3. So your risk is right about here for a nice range break on UBNT. And don't worry, Waleed, I'll drop that top list in the chat area here before we conclude, so that anybody wants it can just fire it up tomorrow. Really good list to have. So we got risk down here and our end profit area right about here. So we had a nice healthy area here between risk and reward, which is always what we like to see here. Prior 15 minutes here, reward area up here. So a really big or a really nice gain, a really clean trade on UBNT. But like I said, you really had to hunt and peck for these today because a lot of them were already past their mark or just weren't looking conducive. Here's another one right here, NSC. Oh, let me backtrack on the UBNT. What do we notice about UBNT? How did it close today? With a relative volume of 1.45. And just keep in mind, not only do we have to have them busting out on the all-time high, that's an added, positive benefit. Just because they're out and there is no resistance, does that mean that they're going to go? No, but it's a nice characteristic to have on a nice clean breakout setup with minimal risk. Also, keep in mind, as these highs are occurring, we have to have that accelerated 1 minute volume on the 1 minute time frame. And then we also like to see corresponding higher than normal relative volumes as well. NSC, finishing the day with a relative volume of 2.22. Getting the first tick above on this little wiki 5-minute candle here. But once again, using the prior 15 minutes, this is our risk area right here. My eyes are playing tricks on me today. And before the day was done, not as big of a reward area as we had on UBNT. We could just pretty much call this one a 1-for-1. But on a gap day like today, this chart pattern right here was pretty prevalent. We had some chop and then a move higher. A lot of this is, we're going to have this pattern a lot, right? You got the breakout and then you got the nice sideways action and grind higher for the rest of the day. A lot of stocks exhibited this pattern as well. Surprise, surprise. AWI was also a good one. Here we go, right here. A good 30 minutes into the market, we get the push higher. This one just off to the races, but once again, right back to the entry line and then a slow grind higher for the rest of the day. So on this one, we had our risk area here. Reward area initially was here and then finished the day up here. But if you wanted all that, you pretty much had to stay in it all day. And as traders, we don't like to see something that's gone up nicely for us gravitate all the way back down to the break-even area. But just like with a Holly trade, hey, you got to take a little bit off the table. If you want to risk the rest, make it a break-even, maybe a few pennies outside. As with anything, sometimes a penny gets us out, and on a day like today, I saw a lot of things that stopped out by a penny or a nickel before turning back up. So all in all, the gap threw us a curve, takes a little bit of steam out. But if you know where to look on your bread and butter tickers, there's always something going on. Now, were there a lot of downside plays today? Well, as I said earlier, the downside version of this was pretty much dead. No big surprise there. And even on my regular turbo breaks, which I typically start looking about 30 minutes into the open. Hold on, that was the wrong one. But if we went back and started looking at all the signals that were coming out 30 minutes, 45 minutes into the open,
And we lost you again for a little bit. Friggin' squirrels. Jamie. Ooh, this was a good one. All right, well, we'll just wait for him to pop back up here because he usually does. He's going to be pissed. That was about a good minute. That was about a good minute of silence.
I'm so sorry. It's been fine all day. And of course, webinar time comes around and awkward silence. So I apologize. I don't even know what I was saying when it cut out. Are you with me now, Steve?
Yeah.
Okay.
Can you hear me?
Okay. So what I was saying, I don't know if you guys heard me, but on the downside today, as far as the shorts go, I typically look to my turbo brakes down about an hour into the open. But what I was saying is, nope, today this thing acted pretty much as a bottom finder. Here I just clicked on SRCL. Look what it did. Boom, for the rest of the day. I'm just going to randomly scroll through some of these. Oh, look, AWK hitting lows here. The rest of the day we grind up. So, a few of these would have continued, but, whereas I'm usually looking at this for nice range breaks to the downside, not quite the case today. It would have acted better as a bottom ticker on most of these plays. So everything just acting kind of a little bit different than it normally does today with the gap up. Some good range breaks that have been found, some decent trades from Holly, but all in all, it was a shifty market. So going to comment on what is, not what we hoped would be. So that's about all I got for today, and we have a little bit of time. So I wanted to allocate, if we did have a little bit of time today, wanted to open the floor up for any questions about Brokerage Plus or Holly for the remaining time that we have today, starting now. So go ahead, if you have any questions about Holly or Brokerage Plus, go ahead and let us have them, and I'll take them on a first come, first served basis.
I had a good question today in the one-on-one, and he said, well, if I go risk on, Steve, do I have to sell those positions manually at the end, or will the system sell me out of them? And the answer was the positions get sold out by
Right.
market order 5 minutes before the bell. I didn't know that until today.
Mm-hmm. So in its native format, I've just got the Brokerage Plus module pulled up, and I'm on the Holly AI tab. So we can go in here and we can edit the long trading instructions and the short trading instructions. So, I just click on this one. If I let it run on risk on mode, then, yep, you're absolutely right. It will throw a stop loss out there. But as far as the exit goes, it's not going to adhere to the timed exit or the reduced risk or the profit save. It'll just stay open all day, and assuming that profit or that stop loss does not get hit, it would plug you out right about 5 minutes before the close on a market order. If we select risk off mode, then everything applies just like we would see it here in the Holly panel. If the timed exit comes up, it's going to plug you out. If she gets out on a reduced risk, that's also going to get you out. Profit save, anything is going to get you out. Basically, risk on puts the stop loss on, and then the exit is up to you. And if you do nothing, let it run all day, 5 minutes before the close. And Waleed is saying, I tested, okay, yeah, the best of. So best of, you might have noticed when I was in here, we also have this option here, the best of. And the one it's going to pick is whatever the module that is generating the trade is in currently. So markets open. If NEO is currently in risk off mode and we have the best of selected here, then it's going to pick whatever that module is in at the current time. If no trades have been made from that module, let's say it's the first trade, so we don't know if it's in risk off or risk on mode, then it's going to default to risk off mode. So keep that in mind. Yeah, okay. I got you, Waleed. Okay, so any other questions regarding the Brokerage Plus module or anything to do with loading up Holly automation strategies or turning them off or on, or how things work? Let's see. Let me read your question here, Bill. Was that on risk off or risk on mode, Bill, on the RPM? Or are you just referring to Holly's blotter here? Let's see. I forget what module that was in. Okay, so what you're saying is you had it on risk on and you didn't get an exit 5 minutes before the close? Okay, well, I would venture to say that we would definitely want to take a look at your robot logs. The way you would access those robot logs is you would want to go to, I believe it's My Documents, right, Steve? In the
Correct.
yeah.
And
So,
find
for example,
Robologs,
hmm
and then today.
yeah. And what I'll do here, you've got a trade ideas folder in your documents, My Documents, and you'll open that up, and you'll see a robot logs folder, and you'll open that folder up, and just you'll see the dates listed there. And if you want to zip that over to info@trade-ideas.com, we'll definitely take a look and see what's going on there. All right, last call for anything Holly or Brokerage Plus related before we give it a wrap for today. Thank you, Waleed. Thanks for the kind words. All right, looks like we don't have any more questions coming in here regarding Brokerage Plus or Holly AI. So, Scott, if you're ready to walk us out, we're ready for you.
Sounds good. Thank you. All right, it's a couple items on the way out. We have an ebook, and it's a very good one to keep on your desktop. So download the PDF to get it. Go to trade-ideas.com/ebook. Put in your email address to get the download link. It's got 5 strategies to win in a post-BTFD market. And both Steve and Jamie contributed chapters to it. So do check it out if you don't have it yet. We have a podcast, released a new episode over the weekend. There'll be a new one up next Friday. And just search for Trade Ideas Podcast wherever you listen to them. Add us as a subscription. Pretty easy to do. Get some inside info into all the new tech. We have a promo code that can be used for new accounts and also for upgrades. Auto Holly, all caps, will save 15% off the first month or year of your new Trade Ideas subscription or your upgrade. So take advantage of that and get all the goodies. Email info@trade-ideas.com if you have any questions. That goes into our help desk. That is the best way to ask us questions. You can follow Steve on Twitter at TodayTrader. Jamie Hodge is at QuantBot. And Trade Ideas Pro is the handle on Facebook for you to follow there and share stuff that we post with your friends. Thanks, Jamie. Thanks, Steve. Thanks, all. We'll have a recording up later on tonight or tomorrow morning.
See you tomorrow.
Thanks, everybody. Hope you have a profitable Tuesday. Bye-bye.